Hey everyone, shooting another video for the Black Belt Business Union. We had one of our members request information about employee versus contractor. So I wanted to present this in a two-part presentation. Now it's a very exciting time. We have the blackbeltbusinessunion.com. Our website is up. We also have a platform where everybody can connect together. It's, to tell you the truth, I hate Facebook, I hate social media. So this is a way for us to communicate outside of that and also to bring in more members in. So visit that webpage, join it. It's free, and we can begin to connect with one another. Okay, that's our goal. That's to unify the industry. So before we get into the topic, disclaimer. I am a CPA in the state of Virginia, but I am not your CPA. So all the information that I'm providing to you is for entertainment purposes only. Do with it what you will. On to the information. Okay, so we got employee versus contractor. Now, what does that really mean? These are basically the same words for employed and self-employed. Okay, so employee versus contractor. You're you're employed by somebody, or you're a contractor, in which case you are self-employed. It's also the same thing as saying a Form W-2 is a Form 1099, because employees will get a W-2 at the end of the year for their taxes. Contractors are going to get a 1099 NEC. Actually, they changed it this year. Well, 2020. It used to be called a 1099 miscellaneous. Now it's a 1099 NEC, non-employment compensation. And the reason is they are trying to separate contractors and give them their own form. A lot of times it's because there's this gray area about whether or not you should have instructors, people working for you as employees or as contractors. We'll get into that a little bit later. But I think this is a strategy for the IRS to kind of take those out, and that way they can audit them if they choose. Okay, so this is something we have to be aware of. This is a change beginning in 2020, and it looks like it's going to remain this way for years to come. Okay, so again, these are the same ways of saying the same thing, but it's also the same thing as saying pay your taxes first, and then you live your life, which is an employee, or being a self-employed independent contractor, you can live your life first and then pay your taxes. And we'll explain this. So we have a great opportunity here, and I tell this to a lot of people, and that is that as an independent contractor, we have this ability to now live our lives through martial arts, deduct certain expenses, save on taxes. And so again, it is an opportunity, or it could be a curse in a way if you don't understand how to categorize your expenses, how to maximize write-offs, and how to file your taxes the right way, because it can be a problem. So we're going to go through a couple of those things today, and once again revisiting the idea of being an employee. So employees get the W-2. You essentially get this income. So whatever it is that you make, you get paid. But before you actually get this money in your bank account, you're going to pay taxes. What kind of taxes? We already talked about this in previous videos. We have Social Security tax, which is like 15.3%. The employer pays half and the employee pays half. And this is another kind of idea about why businesses would like to have people as independent contractors. You also have federal income tax. Federal income tax rate is now 37%. You think that you might not actually pay that much money, but if you're making above $150,000, which it sounds like a lot of money, but you can get there pretty fast depending upon what kind of work you do. You can pay up to 37% taxes. That's quite a lot of money. On top of that, you got to throw in state income tax. In California, it's like 8%. So that's a lot of money as well. And then some locality tax. I used to live in Bethesda, Maryland. Montgomery County charges you a locality tax. So all these taxes add up. So again, what happens is you get paid, you pay your taxes, and of course you got to pay bills because you got to live. But it essentially means you're living your life on whatever else you have left over, which is not really a great way to live. And so having a side hustle or having some type of side business, eventually growing it to become your main source of income, is a great opportunity, because as a 1099 contractor, what this means for you now is that you get to live your life first. So essentially you're getting income through multiple streams of income. If we're talking about a martial arts school, we have tuition, merchandise sales, private lessons, seminars, and you can branch out into other areas of business industries and then combine them and all that income into one entity, being LLC or S corp or corporation, whatever that is. We have other videos that we've talked about that in detail. So essentially, you get this money, and you get to have a whole bunch of expenses that you're writing off. This could be some of the things, some of the bills that you might be paying as an employee, right? You're now in this, again, this opportunity of, if certain expenses have a business use, then we can classify them under the business and you can get the benefit of that. Meaning that out of your income, you're now going to subtract all these expenses, which you'll come to what's called net profit. So that's your income after expenses. And your taxes will be now assessed on this, as opposed to you just getting paid, paying your taxes, and then getting that money. So again, it's like living your life first, paying all these different things that could be that are business related, and then essentially paying your taxes out after that in a much lower rate. And so we can see that in the example here. So these are all the different items. Let's take into account that you're an employee right now. Okay, so you work for somebody. You get $40,000 in gross income. You're gonna have to pay first Social Security, and as we said, it's 15.3%. Your employer pays half. You, as a employee of the company, will pay half. This is based on the law that you get to split this, what's called self-employment tax, right? It's really Social Security. It's money that you're going to get when you get older, if it's still around. Who knows? But in any case, you're paying it no matter what. After you pay your Social Security tax, you also have federal income tax. Let's say it's 12%. If you're under $40,000, it's about 12%. State income tax, and so that amounts to about 25%. And this is all calculated on that 40% off the $40,000. So at the end of the day, you'll have about $30,000 take home that goes in your bank account. Then you got a whole bunch of bills. You got to pay rents. You got to pay internet bills. You got to pay your phone bill. You have all these different expenses that you got to pay to live, right? And so then let's just assume it's $20,000. You got about 10 G's to go and do whatever with. Okay, hopefully you're saving it, you're investing it. We can talk about that in another video. Some people have some questions about that. Now let's take another example. You're a contractor, so you get paid by a check. It's the full amount, and you're not going to be subject to any of these taxes, at least in the beginning. So then what will happen is you can now deduct your expenses. And let's assume that some of your personal expenses, like they're really business expenses, like you have to have a cell phone. Your cell phone's used for business. You have internet, and now not all of it will be considered business expense. Some of it you have a personal vehicle, so you drive your vehicle for personal use. You have it for business use. So you're going to have a percentage that is going to be based on your business. Let's just assume that $15,000 of your normal bills are actually business use. Well, now we have to subtract that $15,000 from the 40, and you end up at $25,000. Now, based on this, all the taxes will be assessed on that $25,000. Let's just assume it's the same tax rate. It works out to be about 25%. If you add up all the employee taxes and apply them to your contractor taxes, you end up paying about $6,000. Your take home will be about $18,000. You can see just by looking at that, I don't have to do the math, but it's like over $8,000 in savings by being classified as a contractor. Again, you got to really know how to, I wouldn't say game the system, but you got to know how the game is played. Okay, because you don't want to be caught at the end of the year and having a huge tax bill, and you didn't categorize things correctly, you didn't save certain receipts, and the IRS came in and they said, you know what, you owe me a whole bunch of money, and that happens. So as the goal of bringing us together and providing this martial arts industry with more information, this is some of the information that I want to arm you with. And so now we come to the question of, like, when I hire people, or even I hire myself, how should I pay myself? How should I treat my staff? And this is a question that I can't really answer on a public forum. So I would say let's take part 2 and present that in the Black Belt Business Union. So if you haven't already joined the union, go to the webpage, join the union, download the app, and it's free, like I said, and I'm going to be posting information there. My goal is to take everybody from our Facebook group, get all the new members to be put into that platform. We are using a mighty network platform. It's an amazing tool. It's going to help us really be organized, categorize all the information that we're putting out there, share information, share experiences, and help each other out. And that's the goal. Okay, so if you want to go and learn how to reduce the audit risk about this, how to classify employees, contractors, I will share with you an opinion that you can take and use if you like. So I'll see you on the app.